All right, all right. Good morning. Happy hump day. Happy tax day in America, said no one ever. I think we need to throw some tea in the ocean again and get some better representation of what we have in this country, but whatever. Um, Interesting last few days. If you didn't see my live streams at the close for Monday and Tuesday, go check those out. I explain my thoughts on the market pretty much in depth. We'll go over a little bit of that here, but we only have about 25 minutes to the open, so we'll go through a few things. Like for one thing, explaining why we're here. If you're new to the stream, welcome. I appreciate you being here. My name is Jacob Gabbard from Invest with Jacob. We do this every Wednesday where we live stream our trades with our indicators. We have Pivot Point Pro on the left where you see the SPY screen here. This is our flagship first indicator. It absolutely crushes. Yesterday was an amazing day on it. Overall, it's generated over $120,000 worth of income if you follow our rules and what we do. All of those trades are documented by third-party traders. So Matt, who is part of my group, he is a paid member of my group. He details all of my trades to make sure that I am not telling you guys fibs. And so all of those trades are in detail broken down for you. You can see all of them if I bring my Discord room over real quick. So oh my gosh, why won't this lock in over here? First day using a computer, I guess. There we go. We have our day trade alerts room, and every single trade is chronicled in here. So yesterday you can see that first bar of the day, April 14th, was yesterday at 9:33 a.m. We got in at 689 for 88 cents, and we had our stop and ended up cashing out that trade. You can see all the move in our stops and taking profits. Our last take profit was $2.25 on an 88-cent trade, so that's pretty good. And then the average exit on that was $1.34. So 34 and 12 is 46 cents. We're trading 50 contracts, so that's about almost $2,500 on that trade. And then we had a short that was stopped out for a small loser. But we also had our swing trade alerts. Those are all documented as well. So on the weekly indicator, on the 10th, we got a buy signal. We've already cashed out on a $17 trade for $22 and $24. We still have a little bit of that open. Normally, we would let the weeklies run further, but we're up in the nosebleed, so I'm a little concerned. And if we do pull back, which is what I'm expecting, we can re-enter that trade. Before that, our swing trade before that one, and several others. I mean, we can go back as far as you want, but this one here was, right here. We got in at 640. We got in for 1165. We always close our first third at a 20% gain, so this was a 20% win right here. That protects us on our last 2/3 of the trade in case the trade goes south. That's great risk reward management. Our next third, let's see. Oh, we closed a half of the trade at 2260. So essentially, we closed 1/6 of the trade here. The reason was Trump was speaking that night, and that could have been a very big catalyst. So we wanted to protect ourselves. We had 2260 on that trade. On an $11 trade, 2260 was our cash out there. And then the last half we cashed out for $37 on an $11.60 trade. So this is what we do here. I am a professional trader. I do this full time. I teach people how to trade. I give you all of my trades. We go through everything. And then what isn't documented and the reason it's not documented is because it's a self-contained unit, is Squeeze Sniper. That's the other indicator we'll be looking at today if it does give us anything. You can see right here we had a 15-minute short. Your entry was 69.99. Your stop was 7,004. This one happened to stop out for a 4-point loss, almost 5-point loss on the ES. But overnight was really good. If you were taking the overnight trades, you had not this one. This was a short that got stopped, but over here you had, where is it? Let's condense this down. That'll make it easier. So over here you had a hourly long. This was actually on the 14th, right at the close, and that one cashed in for 25 ES points. The trailing stop hit, so a total of 20 ES points on that hourly long there. This one down here was an hourly long that cashed in for 28 points. This one here was a 5-minute long that won. So Sniper just absolutely catching these big moves and crushing the trades. Now, I'm an open, honest, upfront person, and I want you guys to know that because it's really important to me that you understand this. So let me leave Sniper up here for 1 second. So because of trading views limitations, this is not something I'm trying to pull the wool over your eyes, and that's why I'm telling you this up front. Because of trading views limitations, and I actually have an update on Sniper that's going to be coming out very soon. Actually, we can look at the stats on that in a second. But because of trading views limitations, the entry gets repainted, is what they call it. And what that means is, if you're in the middle of a bar, so let's say you're in the middle of a 5-minute bar. So the bar is going up and down, right? Here's your bar, and it's doing this because they're trading. And you get an entry right here, okay? You take that entry. And as long as the trade is live on your screen, that entry price right here, $69.99.50, will stay on the screen. So when you enter, well, here I can just show it to you in real time. What we'll do is, it's easier to see than, here we'll go to this one here. So actually this one down here is better. Let's do this. So if we go to the 1-minute replay here, start new, what you're going to see is, let's play. Okay. So on this bar right here, which actually happened to be the 935 bar this time, your entry price was $69.47, so it was about halfway up the bar, $69.47.50. This was not a good one, sorry. That one actually happened to have start on the actual time frame. So let's go a little further here. This one actually worked out really well. So there's your first profit. And you get the stop loss right here. So this is 69.55.75. So now it's 69.57. It moves up with price, so it stopped out right there. But that stop loss moves up with price, so you can continue to trail your stops. To be perfectly clear, you still have to put a stop in your trading software. This tells you where to put your stop. It doesn't stop out your trade. It just tells you where to put it. I believe we get another trade here in just a second. So I want to show you what I'm trying to, the limitation of TradingView, because it's not exactly how it appears on the chart post close of the bar, but it's easier to show you than to try to explain it. So if we can get our trade here, I know it's coming soon. Here, we can make this go a little faster. Okay, maybe it was further along than I thought. There it is. Okay. So right here, you got an entry for a 60-minute long. Oh, just went away because I moved my, dang it. Give me 1 second, it'll come back. Ah, darn it. Replay is so fickle. Anyway, it was on this bar. 1038 was your entry, right? And this was still a very, very, very good trade if you watch it play out. But because of TradingView's limitations, when that hourly bar closes at 11, it's going to move this entry back to 10, all the way back here. So all it does is it adjusts from here as you're watching the trade. So if you entered here, the take profit would just be higher. But it does move the, and on an hourly, it's a big move, but on a 5-minute bar, it's not as bad. But my point being, the repaint moves the entry. So what happens is, during the live bar, TradingView can track all of the tick data every single time the bar moves. We get the exact entry, we print it on the screen, you get the exact entry. And you still get the exact take profit, and you still get the exact trailing stop, and you still have winning trades, and it's still a very good indicator in that regard. But because once the bar closes, TradingView throws away all of that tick data and just says, here's your bar in full. It was a high, a low, and a open and close. You don't have the exact entry, so it just throws it back to the middle of the bar. So it entered up here around 69.75 or so, and that bar ended up doing, or that trade ended up doing great. But as we exit replay, we'll see that that came in at 10, and that is very annoying. But the reason I bring all of that up, I know that was a long kind of explanation. One is to be upfront and honest with you guys. I'm always, I don't want to do that. I'm always transparent about everything that I do because there's a lot of shysters in this business that are, quite frankly, a-holes. And I am not that person. I am a person that stands behind everything that I do, and I want you to see that. Two, it's because we have an update to fix that problem coming out, and I'll show you that in just a second as well. So let me get out of replay here. Go back to that. We'll go back to that time frame real quick if I can. There we go. So we'll go back over to that trade all the way over here. Where was that? Down here. And you'll see that the entry, oh, no, that's not it. That was a different one. The entry was all the way back here at 10. Now, where it actually entered was right here at 10:38. And your take profit would have just been up here. So the take profit from here at 10 o'clock took profit here at whatever time this is. The take profit from here just took profit a little bit higher. So you had the same trade if you were watching it live on your screen, but when you go back, you might be like, hey, I didn't get that entry. I got this entry over here. What happened? That's what happened. Now, we do have a new indicator. It's not new. It's the same indicator. It's Squeeze Sniper, but it has some extra stuff in it. So I'm going to turn that on and give us our stats table. Yeah, we got our stats table on there. So we are cashing in at about a 2 out of 3 trade win rate, 66.67. And our average win on those trades, and this is the 5-minute and 15-minute time frame. So we're winning about 12 points and losing about 7.5. And actually, I think this is there's a lot of things in here. Yeah, this has to go to 2.2. This goes to 0.95, and this goes to 2.2 for ES, right? That should do it better. There it is. Yeah. So we're still winning at 66%. 14.75. So we're averaging about 7.5 a win here. And you won't have, sorry, this is a lot. You won't have to worry about what I just changed. ES and NQ have different multipliers that we use. And because it works better, NQ moves differently than ES in some ways as far as multipliers. So it'll automatically set everything for you when you go to ES or you go to NQ or you go to whatever. It'll automatically set it to its most optimal setting. But I had it set for NQ. That's why the numbers were low. But you're still winning 66.6% of your trades. Your average win is about 15 points. Your average loss is about 7. And your expected win is 750 for 289 points. Now, this is TradingView's data given to you. And all of these entries are 100% real-time entries. There's no repainting whatsoever. And the way you get around that is you wait till a confirmed bar closes, and then you enter after that bar at the open, and then there's no repainting. That bar is always the closed bar. You are always at that place. So if we go back and just look here, well, here was one trade that stopped out. Here, so this long right here, all of this is just for me. Don't worry about it. It'll just have the entry and the stop and the take profit in here. But it's self-contained. So let me turn off 2.0 here, and you can see that this 15-minute here, it was only a 7-point win or 6.75 point win. And that's going to be that way sometimes, and then sometimes it's going to be a much bigger win. It really depends on the true range. So that it looks back at the range and it says, okay, here's where we would expect it to expand to, and then you get your take profit here. What we figured out is that trailing stops were not helping us, so we just take profit now at wherever it says to take profit, and we're done with that trade. So if we go back and just see if we can find a couple others. Now this trade's a lot less because it's a lot more accurate. So over here you had a $3 winner, a couple stops. Here you had a $9 winner. This one was a 9-point winner. This was a 17-point winner. So This one is highly accurate. Well, actually, I don't know why we got to go back and look. We can just look at the trade log. It's so simple. I'm so silly. Do that. Do show trade log. So this will show you the last 15 trade. Well, it'll show you as many trades as you want to put on the screen. So I think I have it actually set to higher. 25. This is 25 trades. It only has 39 trades over the last 3 weeks. So you're getting about 13 trades a week on the 5 and 15 minute time frames. And then you can see exactly what they were, the win loss, and then this is just data for me. Don't worry about it. So here is all of your win loss rates for the last 25 trades. So 289 points in 3 weeks on the ES. If you just do quick math on that, 50 times 300 is 15,000. So just under 15,000 net points in 3 weeks if you're trading one contract on the ES. I think that's pretty solid, personally. You may not. I don't know. That's up to you. So that is that. So we'll keep Sniper 2.0 open because that one's ready or is being used. The other one is not. Anyway, that is Sniper. Both products very good, but the second edition or third edition, I guess it will be, is much better because it has actual real-time entries at the actual price you're getting, and there's no repainting, there's no going back and changing it, there's no fixing it. It's just you get the actual entry of the trade, you get the actual take profit, and that is it. Right now on Sniper 2.0, the repainting problem is what it is. It's just a trading view limitation. It wasn't built like that, again, to cheat anybody or to try to be like, gotcha. It's just what TradingView can do, and that is that. So if you want to get Sniper, the new edition will be out hopefully this week. We're running tests. I want to see it perform more in real-time atmosphere. That's the biggest thing. Is I just like to see them real-time trades come up so I can watch them play out exactly to make sure there's no glitches that I can see or problems that I would envision. But that should be out soon. We're still running a discount on it because the final product or a version that I'm happy with isn't out yet. And then when that version comes out, price does go up. So just so you know, that'll be down there. Also, you can get Pivot Point Pro at investwithjacob.com. And that's that. So we will be getting ready for the open here. We got about 8 minutes. Let's see what the comments say here. Hello, Jacob. George, welcome to the stream, buddy. See a lot of hurt coming next week. Mothers hide your daughters, traders hide your profits. Possibly. That we're kind of looking for a pullback, so we'll see what happens today. I may have missed something, but does the new version of Sniper take profit all at once without a take profit 2? Yeah, that is the case. So the take profit 2 has gone away because the data shows that we're pretty good at getting the take profit 1 zone near the highs. And so the take profit 2 was causing a loss overall in total gain. So maybe you got out at 10 and your stop is at 7 points. We were not getting above 10 enough to justify the take profit 2 trailing stop. So we just took it away and made it more profitable. Well, the newest version comes out. How will current users receive notice? Same way we always do, Brad. They give you a little blue circle right here in your trading view. So make sure you always every day refresh your trading view screen, and if there's anything new, you'll see a blue circle. Or you can come in right here and hit the 3 dots, and it will say down here, usually right in this area where it says source code for me, you guys won't have that option. But anyway, right in here, it will say update to newest version as well. All right, let's see where we're at on the kind of a choppy overnight session here that usually leads to needing to get a set. Let's see, that one's okay. This one's still working from here, so that would be okay. Our most likely scenario is we would get a sell signal on Pivot Point Pro, especially considering we got a buy right here a few bars ago, depending on how this long stop works out and stuff. So we will see if this long stop sticks, then we'd still be looking for a sell because of how some of the filters work. But at any rate, that's what we'd be looking for. Now, Pivot Point Pro, so if you're new, guys, Pivot Point Pro tries to find tops and bottoms of the market and then buys and sells off of those. Yesterday, Pivot Point Pro was pretty spot on. As we got to the open, the very first bar of the day, you had a buy warning coming into the open. This BW is a buy warning. You also get SWs for sell warnings. The very first bar of the day, we don't trade pre-market or post-market, so all of this, ignore any signals, even though this buy was good. Ignore these signals. But once the market opens here, we get a buy signal, first candle of the day, and it never looked back. And like we saw the trade in our Discord, we did take this sell here, looking for them to break down maybe back to VWAP or the 21 or this little consolidation zone. Obviously, it failed and continued. And then this buy here at the end of the day was an absolute monster too. So 2 monsters, 1 quick loser, and another good day for that indicator. With Pivot Point Pro, you're looking at probably 1 to 2 trades a day max. If you get more than 2 trades a day, that's kind of a rare day. It does happen, but that's kind of rare. But that's, kind of the frequency of trade you're looking for. Again, Pivot Point Pro, if you follow the rules, is absolutely crushing the market. I always say if you follow the rules, because the number one enemy of a trader is the trader. You think you're smarter than the market. You think you're smarter than the indicator. You think you're smarter than the algorithms. And that is the absolute crusher of traders. If you just follow rules and say, you know what, I'm not smarter than the system that has been designed to have zero emotion and look at the data, process that data in a split second, and give you an output that is the most likely scenario. If you can just wrap your head around that possibility, because it's a fact, then you will be a successful trader. The reason all of the clearinghouses now use algorithms and don't allow people to manually run their trades is because emotion is the biggest crusher of accounts. So if you can trade robotically, which is what I'm trying to give you here is robotic trading, if you can trade robotically, you will be a successful trader. And you have a good plan, of course. You can't just trade robotically with a stupid plan. You won't be a successful trader then. But if you can trade robotically and teach yourself to do that, you will be a successful trader. And I talk about all the time. Let's see, we got about 3 minutes, so we'll make this quick. The market can do anything at once. We have ideas. I have an idea every day of what I think the market is going to do. And if I see that idea start to play out for like swing trades I'm talking about now, if I see that idea start to play out, then I look for a setup. And if I get the right setup, then I enter a trade. So if I have an idea that the market's going to go up and it goes down, that doesn't mean I lost money. It means my idea was wrong, right? But I always have an up and a down idea. Here's where it wins up. Here's where it wins down. So I know what to look for. And then I say, okay, the downside's playing out. What's the downside setup? Ooh, the upside's playing out. What's the upside setup? Everybody watches my videos. Not everybody. You guys are here. You're here pretty regularly. But people watch my videos and they say, you give up or down so you can't be wrong. I don't want to be wrong or right. I could care less what the market does. I want my account to go up, not down. That's what I care about. I care about my account going up. So I'm giving you the idea for up and the idea for down so that you know whichever way it plays out, you have a trade idea if you want to take it. Not all moves have trade ideas or setups. Not all moves give you setups. But if the idea starts playing out to the downside, you can look for the downside setup and make a trade. If it starts playing out to the upside, vice versa. That's why you get both up and down from me, because the market can go in either direction. I'm not here to tell you where it's going to go exactly. I'm going to give you targets and I'm going to give you ideas and I'm going to give you primary count. What I think is more likely to happen is this, because it's the most likely scenario. But if it doesn't, here's what to expect. Because just like when you roll dice, the most common number rolled is 7 statistically. Does that mean you're going to roll a 7 every time? No, it means that when you roll dice 1,000,000 times, the most common number rolled will be 7. Why do you think that's when you lose on craps? When a 7's rolled? Because the house knows that the most common number is 7, so they're going to sweep the table on 7s, except for, of course, on the come out roll. So that's why they do that. Statistics, the law of large numbers, that is how you win at trading, guys. You take the most likely outcome over and over again, and you pound that edge. Always think of casinos, not the gambler. What do casinos do? They take the edge and they pound it. They want you to hit that slot machine button as many times as you can because they're getting about 3% every time, or over the overtime on those. Okay, we are at the open, guys, and I'm not ready because I talked too long. We're going to look for a sell here. I got 695. I'm setting up a sell for. If we get one, I got to hurry because it could happen. I am expecting the market to pull back. Whether it happens today or not, we'll see. But overall, I am expecting a pullback before all-time highs and a pretty substantial one at that. 695, okay. Let's see here. Let's zoom in there. Okay, we are in a squeeze playing out, meaning that the market has been building a squeeze here for the last while on the 5-minute chart. So we'll see which way that ends up truly playing out too. All right. So they just went up and matched the pre-market high. This is also that black line that just popped in as the most traded zone of the day. That's not surprising since the market just opened. All the volume came in. You're always going to have the most traded zone right around the open at first. On the right side is the ES if you're new. SPY is on the left, ES on the right. We're looking at Pivot Point Pro on the left and Squeeze Sniper on the right. So if we get a sniper trade, you'll see in real time that you get the real-time entry, you get the real-time stop, you get the real-time exits, but you don't get it if you look at it historically, and that's the difference. So like I said, I want you to be aware of that repainting issue that is a TradingView issue currently. For the markets to break down, they're going to need to get through yesterday's high there at 694.58. Of course, VWAP, the 8 and the 21 are all bundled there, so that'll be a place to watch as well. So keep an eye on those things if we are going to get the market to drop a little bit. Pre-market lows down there at 693.05. I feel like I'm missing some key levels here. I wonder if I can do it this way. Let's trash this. And I have so many charts that I never have them all set up right, which is stupid. Add this indicator to the entire layout. Let's see if it gives me the same settings now. I think it does. Yeah, there we go. So the after hours low is 693.85. The pre-market low is 693.05. So they got to get down into this zone, start breaking below that with some force, and then we can look at the possibility of a breakdown. But right now things are bullish until they're not. The bulls are in control of this market. SPX 7000, which is about 18 points above us, is a huge call wall. So you'll want to know that as well. I need to put my, let me go to my, oh, god darn it, I put them on the wrong chart. We are also currently in positive gamma, and that means that the market makers are a little bit underwater and have to buy futures to hedge against the call wall they broke at 6,900. But we'll see if they come back in force at 7,000. That's on the SPX. Obviously, we're over 7,000 on the ES, but on the SPX is what we're talking about here. So I do want to look at the levels here real quick. If you don't know what Mentor Q is, they give you the options levels of the day that are most prominent. So you can see that 0 DTE gamma wall here at 695 is a big number because that's tied with 697 for very, very high level of call options. And as long as they are above that, the market makers are in negative gamma, or I'm sorry, positive gamma, meaning they sold all of these calls here. they're losing money as the market goes up. They would like the market to close in between these two, call and put, and then they just kind of collect the premiums. So they're losing money right now, which means they have to buy futures, which is what causes squeezes to the upside. Just so you're aware of those things. I don't like all the GEX levels, so we're going to get rid of those. This is just gamma exposure levels. They're okay. I just don't use them very often, so I don't like having all the clutter on the screen. Back to the most traded zone here. Second candle of the day as we make our opening range. How is the script delivered? Email or TradingView Access? TradingView Access. So if you get one of the indicators and you sign up for it, it will give you the instructions on how to get it, and you will send me your TradingView account through either a form or an email setup, and then I will give you access, and you'll be able to get it through TradingView, and it gives you all of the instructions on how to do that. When you pay, what happens next? You'll have instructions on all of that, Adam. Welcome to the stream. R. Smith, do you recommend connecting a trading platform account to TradingView to execute trades in app, or do you execute trades in your investment directly? I do all my trades on my own. I don't trust software to trade for me. If there's a software glitch and it puts in too many contracts or forgets to stop or something, I don't want my account blown up. So I personally have issues with that. I know that I do have a trader, one at least, who has set up Pivot Point Pro to trade automatically, and the results are very good. But that is not something I am comfortable with at this time. And I don't need to trade all day or take every trade or do any of that. I realize some of you can't or don't want to sit in front of your computer. But for me, it's I do other work in the morning for my people, but for me, it's 2.5 hours a day to trade effectively. Sniper, you can trade 24 hours a day if you want to. Obviously, I sleep, so I don't trade it 24 hours a day, and I do things. So there's lots of times of the day that I'm not trading. Welcome to the stream, R. Smith. Cats at home. Hello. So today a new all-time high for SP 500. Are they that close? I don't think. Maybe. I don't know. Certainly possible, I guess. Oops. What's the all-time high? 7,002. Very close. Yeah. Very possible. I would say that there's your call wall, by the way, at 7,000 on the SPX. This is the big one. This one should reject pretty decently if they get there directly, especially. Given their, by the way, the squeeze is playing out to the upside if you haven't noticed. Given their, and, oops, am I on the wrong, what did I do here? Oh, I just moved it way over, that's all. Oh, we had a sniper trade. I didn't even catch it. 15-minute sniper trade over here. I was doing too many things. Came in at, okay, so you can see here, right here, 934, this trade comes in, right? On the 934 bar. Again, we're on the 1-minute chart. It tells you this is a 15-minute trade. So just because you're on the 1-minute chart doesn't mean you're trading the 1-minute time frame. It means that you are trying to get the entry on the 1-minute bar that the entry occurs. So if you wait on the 15 for it to close, then you're waiting, this is 9:36, so you're waiting another 10 minutes, or 9:34, so you're waiting another 11 minutes for it to close. And that's going to cost you, you can obviously see 11 minutes costs you a lot. So the actual entry was at 9:34, 7,018.50, 7,012.50. So your risk is 6. Obviously, your reward is more than 6 because they're up 6 points from the entry already, and we haven't had a take profit come up yet. So you're risking 6 on this 15-minute, and we'll see how it plays out where it decides to take profit. The reason on this particular one you don't get your take profit up front is because it is the two are slightly different. This one is a state change. In other words, right now it's in what it calls squeeze mode, and when it comes out of squeeze mode or it hits a certain number, one or the other, whichever comes first, you will take profit. But if it doesn't do that, it'll keep going up. So as long as it stays in squeeze mode, it will continue to allow it to push. But if it comes out of squeeze mode, that's where you'll see the first take profit. And it may not come out of squeeze mode because, you can have squeezes that are about to fire and they're going and the squeeze is going, and then it never comes out of squeeze mode because eventually it's going to squeeze down. So you'll hit your stop and then you stop out. But once you get to that level, a take profit bubble will appear on the screen and you'll be able to get out of the trade. Now, as long as you stay on the screen, the 15-minute bar, do we just close it? No, not yet. When the 15-minute bar closes, this won't move. It'll stay here as long as you're on the screen. But if you refresh your screen or you leave the screen and come back or you do anything like that, then it's going to move this entry because of the repainting, because then it comes back and it recalculates all the bars again and it says, oh, that bar's closed, so all the tick data went away. As long as you're on the bar, the background in TradingView is holding that data and saying, okay, we still have the data, everything's good. But as soon as the screen refreshes for some reason, whether you leave the screen, change something, whatever, it's going to say, oh, let's recalculate all the bars and see what's closed, and then they'll update it. Two weeks ago, we were pushing 6,300. Now we're at almost record highs. Absolutely crazy moves. True, follow in truth. And if you were in our rooms, you captured those moves. We were very, very short on the way down and very, very long on the way up. And that's not to say we're perfect, guys. We have losing trades. I'm human. The indicators are human. It's an edge, not a be-all, end-all trade. We may get a short here. I got to pay attention. Speaking of which, remember, we are coming off an ending diagonal on the way. So the way down was an ending diagonal. If you don't know what I'm talking about, you can go watch my closing calls that I do live every single day. The last 2 days I went over this pretty in depth. And those ending diagonals end with a very, very sharp move in the opposite direction, usually back toward the origination point. And that's exactly what we saw. We're back to the origination point. We'll see if the market rejects here or accepts. So far, they're rejecting. But this is not uncommon behavior. In fact, it was the exact behavior I was calling for. So the people in my room will tell you that when we got down to the lows, not only did we get long, we were short on the way down and then we were long on the way up. And we captured, I showed you at the beginning of this video, a $33 collection on an $11 trade. Okay, there's our sell. We're getting $1.54 on the 695. Our stop is going to be, well, our stop's going to be 695 actually, because I didn't have time to change it to the other strike. So 695 at $1.54 is currently where I'm at. If you're new here, you might get to be part of the Wednesday curse. Wednesday has been an absolute abomination of trading for us. Every Wednesday has been either a no trade day or extremely choppy or losing trade day. It has been the worst day of the week for us trading since I started doing these live streams, and it's kind of hilarious because I'm demonstrating live what the indicators do, and every week it's like, nope, no thanks, good try though. But I can assure you, they do very well in real time overall. So the market is, well, flat now, but the ADD is negative, and that's a red flag for the overall market. So when you have a market that's moving up strongly and the ADD is negative, that's usually a sign that the underlying current is weak. You can see RTY is already flipped red. ES is getting close to flipping red, and NQ is few points, 20 points away. It's certainly not flipping red yet, but Dow Jones Transport's strongly red. That's also a red flag for the bulls. You have XLF is actually fairly decently positive. Okay, we just stopped out there, unfortunately. 140 on that one. I think this is going to be one of those they backtest VWAP or the 8 and hammer it down, and we're on the wrong side of it trades, unfortunately. Not the wrong side of it, but the small bounce got us because of our stop. Well, that's okay. I mean, that's part of it. So one thing I preach about, and we get to talk about it a lot on Wednesdays, unfortunately, is that losing trades and missing trades are extremely, extremely common and extremely, extremely important if you want to be a winning trader. That's going to sound very counterintuitive, right? But that means if you're missing trades, you are following disciplined trading rules. Because if you're trying to catch every move that the market makes, then you're not following setups and you're not following disciplined trading rules. And those things are extremely important to successful trading. If the market goes down here and you're like, I shouldn't have stopped out, you're wrong. Because if you stayed in, do you know how many times the market does this? And then you take a triple stop instead of a single stop? And yeah, maybe you miss this move right here. Okay, if they make it. We don't even know yet. But if they make that move, maybe you miss it. But you're missing it at the cost of this, which is going to happen more often than this. The reason the stop is there is to protect you because, yes, the market is going to hit your stop and go in the other direction a fair amount of the time. Not a lot, but enough to make you mad. So if you start playing that, what I akin it to, I like to play akin. That's a southern word for you. I like to play cards. I'm a very, very, very avid card player. I take it very seriously. I'll be playing in the World Series of Poker again this year. If you have 5-9 offsuit and you're in the big blind and somebody raises and then somebody 3-bets and you can't afford to stay in, or you don't stay in because you're not supposed to, it's just a terrible hand in a terrible spot, and you fold and then the board comes 5-5-9 or 9-9-5 or whatever, some kind of hand, and you're like, see, that's why you don't fold, that's why you got to play that stuff, that's why you got to defend your big blind, blah, blah, blah. No, you don't. because the other 75 flops are going to be ace king 2, and then you're sitting there with 9-5 offsuit going, oh god, that sucks, right? So you can't play results oriented trading in the sense that you say, oh, see, if I wouldn't have stopped out there, I would have made money. No, the stop is it's the most important part of trading. Getting stopped out is the most important part of trading because it shows that you're disciplined and you understand the levels. Levels don't work every time. They work most of the time. So if the 2 times it wouldn't have, your stop would have saved you, I'm sorry, if there was 2 times that if you didn't get stopped, it would have saved you, the other 19 times would have crushed you. And if you look at the overall EV of that, or expected value, you'll find out it's highly negative. Highly negative. It's one of the biggest leaks in trading is not using stops or ignoring your stop. So if you are getting stopped out and you are missing moves, that means you are doing it correctly. Do you think we could really drop back from here without making a new high? Seems unlikely. Does it? I mean, double tops are extremely common. Now, do I think we'll make a new high overall? Yes. But dropping down from prior high resistance, 100% likely. And when I say 100%, I don't ever mean 100%, but the likelihood of that is extremely high because that is obviously a place of major supply. It is the last place that they sold strongly from, and we're getting back to that for the very first time. So everybody who's holding the bag up there is, everybody who's holding the bag up there is waiting to get that short again. So let me explain price action to you very, very quickly. There are 3 ways you can get to a place. So there's the high, right? Then they sell down pretty strongly. When they come back to this high again, this place was a very strong sell, so you're very unlikely to get through this on the first try. Can they poke above it and make a slightly new high or something? Yes, that's one way to get there. Another way is to double top it exactly. Another way is to come up short and sell. Now, will they come back and make a new high? I think ultimately yes, but if you know how ending diagonals work, you know that this is extraordinarily common to see a move back into this level and then another strong sell off of it before they come back to it. Price action is all about understanding levels and getting to the level. And the first time you return to a level, that is the best time to sell or buy that level. So doesn't mean it works every time, but when they come down and make a low and then they come back up, the first time they come to this low, that's an amazing time to buy. The next time, not as much. You can try, you might get a bounce like this, and then the next time you'll probably get that. But levels are extraordinarily important, and the first time into those levels almost always provide rejection and or support. Do a good one then, JG. I don't know where you probably commented on something I said earlier. I'm not sure what you mean by that. Get back on my profits from last night. I forgot today is Wednesday. Yeah, today is Wednesday. That's absolutely stupid. I hate Wednesdays. I don't know why I picked this day. I picked this day because, every day is normal, but Wednesdays sure seem to chop us up pretty good. At least they have for the last couple months. JG, do you follow any other poker players? I don't play, but I love Brad Owens' banter. So I've actually played with Doug Polk a few times. I really like Doug a lot. He's under some pressure right now that I don't think is nefarious in any way, but we aren't like friends or anything. Like I don't call him up and hang out, but I like the way he plays. I learned a lot of poker from Doug, and I think he's a pretty good guy overall, and he's pretty funny. I actually really like Phil Hellmuth because in the face of all that he takes on, he is such a comedic, just cartoon character of a person, and then he continues to win with all of the new ways to play poker and mathematics behind poker. Phil's intuitive sense is still one of the best in the world, but more out of an entertainment value. I like Phil, and I've played with Scotty Wynn a few times, and Scotty's probably my all-time favorite because back in my bigger days, when I was much heavier, we were in day 3 of a tournament, which is the money, you're in the money, and I was living in Vegas, and I ran into a traffic jam on the way down to the casino, so I was about 10 minutes late. And he's sitting there, and I sit down. He's at my table, which sucks because he's a good player, but it's awesome because he's fun. I sit down. He goes, "You late on the money day, huh?" And I said, "Yeah, I ran into a traffic jam." He goes, "Where? The buffet?" And if you know me, you know I like good humor, and that's hilarious to me that that's what he said. So uh, Scotty's a pretty good guy. I like Scotty a lot. Thanks for that explanation, Jacob. Much appreciated. No problem. A lot of people don't fully, and this is no knock on you in any way at all. A lot of people don't fully understand what moves the market, and I guess in general, you can never truly quote unquote prove what moves the market besides money. But the lack of understanding of basic market dynamics to me is one of the greatest scams in American history. It's part of what I'm writing my book about, is that the market is rigged. It's 100% rigged in this, not the way you think. It's not that they're out looking for my 3 contracts on a trade or whatever, my 50 contracts on a day trade or whatever it is. It's that they're brainwashing you from day one to think a certain way, because if they can train you, the general public, to believe a certain way on how the stock market works, then they can, with super incredible accuracy, predict how you will react. And this is why sentiment drives the market, in my opinion. Of course, you can't prove it, but because we are a herd animal. We are just like the herds in Africa. So when it starts to get a certain weather in Africa, the herds know they got to start moving toward the watering hole. They just know, because they have the instinct and they have the understanding, and the elders know it, so it gets passed down and everybody just knows what happens. So if they can train you to be the herd, they know exactly when you're going to the watering hole. So they can set all of their traps and poachers at the watering hole and shoot you down, right? That's all they're doing. They're training you to believe that news moves the market in a certain way. They're training you to believe that earnings moves the market in a certain way. The analysts on TV are training you to believe that X, Y, and Z move the market in a certain way. There is valuable data to be had out there on which companies to be in when the markets are good and bad. But how the market moves is never taught properly. And I can prove it over and over on a chart. In my opinion, I can prove it, but obviously you can't truly prove that. But I can show you example after example after example of how the market moves and why. Now, does that mean it moves exactly the same every single time? No, we'd all be billionaires if that was the case. 100%, right? That I mean 100% on. But it moves in a way that you can understand when the market should be changing direction, at least for a little bit. Maybe not for all time, but at least for, if you're on a 5-minute bar, at least for a couple 5-minute bars. If you're on a daily bar, at least for a couple daily bars. But what they want you to believe is totally different, so that when the market is racing down, you get short and you're late, and the market's getting ready to turn because it's hitting the exact spot you want it to turn from. When the market's racing up, you get in because of FOMO, and you're late, and they turn it on you again, and you're always the one who's last to the game. Who gets eaten on the way to the watering hole? The weakest zebra, the one who can't run as fast, the one who has a broken leg, the one who's limping, the one who's a baby. The weakest get eaten. So they want you to be the weakest, and then you get eaten. You're always the last one, and the person in the last of the herd is the person that gets eaten. The Lodge getting bullied by Texas billionaires. Love Doug. Yeah, they are. It's really kind of a BS deal. Once again, the elite using their power against you and the laws against you, but not facing up to the laws themselves. It drives me crazy. I am anti-elite, anti-establishment. Don't get me wrong, I'd be happy to be a billionaire. I just might have a little more of a moral code with my money. Power is an intoxicating drug. It really is. And the people who have it have moved into that famous quote of absolute power corrupts absolutely, and we are in high times of corruption these days, in my opinion. High times of corruption. You picked this day because you were originally doing it on Tuesdays and they were bad, while Wednesdays were awesome. Now Monday, Tuesday, Thursdays are awesome, and for the indicator. That's about right. I do remember we were doing it on Tuesdays back maybe mid last year or something, and Turnaround Tuesday was getting us, and I guess it's just my the market's rigged against me. It's looking for the IWJ indicators on Wednesday so they can get my live stream. That's probably it. And then when I moved it from Tuesday to Wednesday, well, they were looking for it on Tuesdays, and then I moved it, and we had some good trading days, and they were like, "Hey, moved it, switch it over, get them." Right? That's probably what happened. So in looking here, we're unlikely to get a trade. So just since I ranted on price action, let's go look at some price action stuff so you can kind of understand what I'm talking about. We'll go to a bigger chart because that's where you can see it a little more effectively. Let's do the hourly. That should be fine. Go to ES, and we'll make this a little bigger. We'll close this over here for a second. Now, some things you have on this chart are actually pretty interesting, and some things are not. So let's go over and just kind of walk through price action. So when the market makes a move, and we'll just start from, say, here. Is this the last high? Something like that. Close. No, not the last high. It might be right around here. Okay. When the market moves down, so it comes down, it sets this lower high, and then it comes down. That's where the big move is, right? When it makes a move like this, one, it's a back test of this low. You can see this low right here that they took it to new highs with. Two, it's setting an important place in the market. So then they come back up. Well, before they come back up, you've set an important place here, so they have to come back here. They have to. They will come back to this important place and backtest it, and you can see that they do, obviously. So they're going to come up, and then they're going to make a lower low. Now when they come back to the high, this is an important place. They're going to reject this the first time, and I should say, they're going to reject this the first time 95% of the time. But are they going to reject it like this, or are they going to make a lower low? Well, they made a lower low. That makes these highs a lot more dangerous for the bulls. So then the first time you came back here, it failed. They're going to come back again. They did here, this back test of this high, and they fail again. Now this one is a little bit less tradable than this one. This is your first time back into this zone. And this produced a very big sell-off. This one produced less of a sell-off, right? You can see that it was slightly less before they bounced it up, and then eventually they made a lower low. So the first time, always best time. First time, always best time. Then they come back down to where? They come back down to this low, and this is why almost always you get, unless they're going to break through, which they did, you almost always get a bounce. They came back and back tested this low, and they bounced off of it. They got very close in both cases to the highs and the lows, and in neither case did they take out the high or the low, and they gave a pretty substantial drop. This is 70.50 down to 68.50, so a 200-point drop. Then they came back and tested this zone a third time, but now what you have is this. So now they're testing a trend line. So this is an incredible third attempt, but a really good place to short because you have now produced a lower high setup. And now you have a clear stop right here and a clear rejection point right here. So you want, once it pulls off the trend line, you want to enter, okay? Because this didn't have to bounce and backtest the trend line again, but it did. Once you get a drop, you can enter, have your stop here, and be looking for lower lows because you have lower highs. So now you have a setup of a high, a low, a lower high, back to the trend line, and a lower high here, but we haven't made a lower low. So now you're looking for a lower low because you've made 2 lower highs. However, your stop is here because if they get back above this, it's no longer a lower high, right? So you have 70.28 up to 70.52. So you have about 15, 20 points of risk, because I wouldn't put it exactly here. I'd put it slightly above that. So let's call it 20 points of risk for the low down here was 68.41. So about 200 points a gain. That's a pretty good risk reward in most situations. I don't know. You tell me. So they come back. Now you have a trend line and you have a back test. All right. They come down. They swipe this low, right? But they come back into this low for the first time. They haven't really gotten down to this low. So what are they going to do off of this low for the first time? They tested it here, but they didn't get to it. So they're going to bounce. It's a weak bounce, but it's a bounce. And then they come down and break that low. They recapture it, and then they fully break that low because they had to backtest this high. Did you see the backtest? So price action happens the same over and over and over again. It's the same thing, and they can do it 3 ways. I just highlighted, I think, all 3 of them. They can hit the number exactly in reverse. They can come through the number and reverse, or they can come up short of the number and reverse. Here, they probably backtested over here to the left somewhere, but that's okay. Here they came up short of the number. Here they came down basically to the number, not quite, but basically to the number. Here they spiked through the number and reversed. All 3 of them right there. So if you're understanding highs and lows, you'll know that getting real close to a low or a high, you should really start looking for a reversal. And that reversal, again, can be weak. This was a weak reversal right here, but it was a reversal. I mean, weak in the sense of the bigger picture. This was 68.21 up to 69.60, so 140 points isn't that weak. If you played that bounce, you did okay. But my point is it's weak in the overall chart. And then they came down and made a lower low, which now is a change of character because you have a high, a low, a lower high, lower low. So the next high is an opportunity to short off of wherever the last area was. And now when they turn down off of this high, see, this is where you get the idea. Okay, we need to make a lower low here. When they get back to this, test this and turn down, you can set your stop above this high and look for the lower low again, right? So this is where you get good trade ideas. You don't just trade because you think it's going to go down. You trade because you have a setup for it to go down. It's totally different, 2 totally different things. I have an idea that the market's going to go down. It got to my point, got right here. It started down, perfect. Now it's playing out. I have a clear place to set my stop, and I have a clear target to the downside to take my first profit, and I'm looking for them to break through because the first time down, they hit here and bounced, and this bounce could have definitely done this. It didn't. It did this. So I take my profit at this first low. I move my stop to wherever I move it to. In this case, I don't know. It would just depend on my trade. And then you have runners to go down from there. I think my wife turned on the air, and it is freezing in here. So that's how price action works in a nutshell, in a very, very small nutshell. It's more nuanced than that overall, but essentially that's how price action works. So hopefully that was helpful to you guys since we're kind of slow right now. I try to fill it in, when we're not trading with some educational stuff. And I do have courses on this if you are interested. That would be in Trade Waves Academy. So right now, this is a 1-minute chart, so I'm not trading a 1-minute chart, but all charts do trade the same. You have a high, you have a low, and now you have a lower high. So if you said, hey, on this bounce or as we move down here, I'm going to put a stop up there and I'm going to try to break this low or come down to this low, I think that would be reasonable on most charts. I don't trade the 1 minute, but That wouldn't be unreasonable to try to do. I'm looking for bigger highs and lows than just random ones on the 1 minute chart. That's why I say that, because the bigger the time frame, the more important that low or high is. So a 5 minute high or low is not that important, but a daily high or low is very important. An hourly high or low is generally pretty tradable. A 4 hour high or low is very tradable. A weekly high or low is extremely tradable. Monthly high or low is extremely tradable. So those are things that you're looking for overall. The other reason this would be a reasonable trade is on the 5 minute chart. Very often. Did I turn off my key levels? I think I did. Where are those at? Where did they go? Son of a gun. I swear to goodness. Am I just blind? Okay, I don't see it. All right, so let's add this to the chart again. So very often, another price action trick, if you want to know it, when the market fails, so they tried to break out here, they turned down in failure on the 5 minute chart for me. Other people have different ways of defining it, but failure to me is a breakdown of VWAP, the 8, and the 21. They closed below it, they got right back above it. However, very often this is a huge indicator that they're going to come down to the pre-market low here at 693.06. So they're back at the most traded zone. I would expect them to try to fail in this area if they're going to follow that direct path down in like an ABC into this zone. That would make sense, where you have your first leg down as A, your bounce is B, and then you get C down into the, down here into the pre-market low. That is very common for them to do. So when the pre-market high or low fails, very often they go to the other side of the range, which is the, if you're at the pre-market low, it's the pre-market high, and vice versa. So we'll see. They're back to the pre-market high here. This is going to be a key area, which is why it's the most traded zone. And whoever wins this battle, we'll see what happens from there. But very often they're going to come down to this pre-market low. You also have a green market on negative ADD, another reason to look for a potential drop here. But again, not something I want to trade on the 5 minute chart. It's not where I'm looking for. If I was in this short still, if this short was live, that would be what I'd be kind of targeting. But since we're not, I'm not going to like actively chase it. It's just something to keep an eye on. Trading is about patience, and quite frankly, looking for A+ setups. Taking weak setups. So a lot of people, when we get to the end of a wave 3, they're like, okay, we're going to trade wave 4. No, wave 4s are shit setups. We're going to trade for wave 5. No, wave 5s are shit setups. At least not swing trade them. We'll day trade them. Like we'll try to find spots where we're expecting the market to go, and Pivot Point Pro helps with that. But we're not going to swing trade that because those fail. First of all, wave 4s are extraordinarily choppy, and wave 5s are fail about half the time. So I don't want that kind of setup. I want a wave 3 where when I'm right, I'm going to get about 4 times my money, and when I'm wrong, I'm going to lose about 1 time my money. All right, after the initial squeeze and reversal, it has been pretty choppy to the upside. So we'll see how the rest of this move up plays out. How are you guys doing? Any questions out there? I'm happy to answer questions. I don't have any issues with that. If you got questions about indicators, price action, charts, whatever, let's go through and see what everybody's doing today. Like I said, the transports being down 1.5%, this is a red flag. Transports are usually one of the leading indicators of health in the market in the short term and the long term. So a short term red day on the transports usually says that the bulls are weakening. Banks are the other one we watch for that. They hit their 52 target, so we were looking for them to come back to 52. They've done that now after their fallout, and now we would be looking for them to try to reject that level. SMH is red today. That's a red flag. It's not hugely red, but it is red. So it's something to say, hey, the leaders aren't leading. Semiconductors are your leaders of the market. So old school market, Dow Jones Transports, new school market because of the AI, semiconductors, both red today. That's, in my opinion, a red flag for the overall move that says the move is at least weakening. NVIDIA over 196, they're likely to hit new highs now that they've broken out. Meta, we've been looking for this bounce for a while. They are fulfilling it, doing a really nice job of pushing. Microsoft, same thing. We've been looking for this bounce. So Microsoft, we told you on Monday, had a weekly buy signal, and they're up about 6% this week or something. Something nuts. It's pretty good. We had a weekly buy signal on IWJ Pivot Point Pro. We were also looking for this bounce. If you've been in my room, you know that every single day at noon we go through these charts. And I told my room that Meta and Microsoft were both looking for bounces. It took Microsoft a while to get off the mat, but once they did, they ripped it. Netflix, they've already had most of their bounce. They can still push higher up to 111 or so. Amazon's red today. So you got a mixed Mag 7. You got SMH, which isn't one of the Mag 7, but you got Netflix, but it's kind of a leader. Netflix and Amazon both slightly red. And then you have very, very strong Meta and NVIDIA and Microsoft, which is going to pump the market pretty good. Tesla very strong today. Apple very strong today. Google flat. So the Mag 7, I would say overall is fairly strong because your two reds are pretty weak. And SMH is only down about 0.5%. So I'd say overall the leaders are in good shape, but you do have a few little red flags to watch in general. Gold down. We are expecting gold to push a little higher than they have overall, but I do feel fairly confident that the overall top in gold and silver is in. But we're looking for them to be in a bounce right now, so very expected behavior off that 400 level. And Bitcoin is trying to get back over, I believe it's 76, and that should push them to 80. And then we'll see what happens at 80. 80 is a huge level for Bitcoin to try to get through to extend their bounce that they're currently in. But I do suspect Bitcoin will come down into the 50s. When you say you don't want when you say you don't want fourth wave down setup, like in today's case, we don't know whether we are in a B wave or wave 3, so may not know if it's fourth wave or C wave down. We are definitely not in a wave 3. So we're either in C of 5 or A of 5 on the bullish count, where there is no wave 3 because we're in a diagonal, so everything is an ABC. Can you give me targets on NASDAQ, like where maybe it will bounce from if it retracts? So if you're saying if NASDAQ pulls back, where is it pulling back to? Is that the question, Penny? And welcome to the stream. If this is an ABC up or wave 1 up, how far can we expect this wave C3 to extend upward? So it's an ABC up because we're in a diagonal. Okay, Penny, I'll get back to you in 1 second. It's an ABC up because we're in an ending diagonal off of the 2022 lows. When the drop in 2022 entered wave 1 territory, there was a lot of people that were me included, had the idea that the major top of the market could be in, because in order for it to get to where it's at now, we would have had to have a very, very big ending diagonal, and those don't play out that often, but it did in this case, and so be it. That, it is what it is. But because of that, it made the market extraordinarily tough from 2022 on, because everything is a 3-wave move. Typically, the market moves in bigger, more impulsive 5 waves on the way up, and then corrective, choppy 3-wave moves down. And then when you get into a diagonal, everything is in 3 waves. So it's a choppy move up and down, which makes it really hard to, 1, sustain longer trades, 2, truly diagnose which way the market is going and how, and 3, just overall understand exactly where you're at in that diagonal, because they can extend and overlap, and they're really just a pain in the butt, honestly. They just suck, and it's been 4 years of that now. But we are in an ABC up. So if we go to the bigger picture chart here real quick, I think we should be all right. Let's go to, and then we'll look at NQ as well for penny. So this is the weekly. So off of the April lows back here, this is wave 5 up, and this is the 5th wave of that. So you have let me give you this. So you have your A, B, C. It's all in this week here for 1. You had an A, B, C down for 2. I don't have my chart on this one with ABCs, but anyway, you had 3, which is an ABC. And then I'm counting 4 as an expanded flat because they made a slightly new high here and it was really ugly. But this is your wave 4 back into 4 of 3 here. And then your wave 5 up is an ABC where we had the A and B early. Now what we would expect here is you would expect this kind of move. And you can still get that up into 7,300 or so on the SPX, especially given the height of this wave. It might even push to 7,400. We could extend that a little higher because of the height of the initial wave. The secondary option, which I gave in yesterday's closing video, was that for the bulls anyway, is that A and B are already in, and this is C of 5, and they're just going to go directly to 7,300. That'll all depend on how this day resolves. If they continue to push here and break the highs, obviously we're probably in that case then, where we're directly headed toward this top. But I would still suspect, given this level of consolidation here, that and then selling, that there's enough supply here to push the market down one time, and then how that market pushes down. If it's an ABC, then we would expect that 7,400. If it's 5 waves, then we're expecting a bigger C wave down toward the April lows, and that could be detrimental to the bulls. We were still in a bull market until the April lows break. So that's just the bottom line. You have a high, a low, and a higher high. So it's the higher low. A high, a higher low, higher high. So until that breaks, until you break that, what's the word I'm looking for? Pattern. Until you break that pattern, you are in higher highs and higher lows, which is a bull market. It just is. So until the April lows break, this is a bull market, and the bulls should have the benefit of the doubt. That doesn't mean we shouldn't be cautious. Doesn't mean we shouldn't be looking for potential breakdowns into the April lows, because remember, everything gets back tested, and they have not back tested the April lows. They will be here. This is going to happen. When? Well, we got to see when support breaks. When support breaks, when this wave 4 breaks right here, that's when I would start to say look out below. So that's that. On the NQ penny, we are at this trend line right now. It's a very, very powerful trend line. I would be looking for a rejection of it. If they do pull back, then I would be looking for a minimum of the 24,190. I'm sorry, minimum of 24,559 to 24,190 would be my target for the minimum pullback, and then the maximum pullback would be, so that would be your 3 wave, and then kind of like that. The maximum would be, if they give you the 5 down to these lows, you'd look for a bounce and then collapse. This shelf right here is going to be the definitive zone. So if they get back through 25,346, that would tell me that they're likely to, because they're likely to bounce that the first time they get to it, and then coming back down through it, that would tell me that they're on their way to these targets down here. SPX still about 10 points away from that 7,000 zone. Has not hit it today. It's 69. I'm pretty sure that this is the high that they just made. This the no, this one is the high right here. So we'll keep an eye on that. Let's get this back over here on the SPY. This is essentially trend day parameters right now. So we're grinding higher in an uptrend, which means each time they tap the 8 until it breaks, you should expect a bounce. Good morning, Jacob. Thanks for the awesome upside play on MU a few days back. You are welcome, John Herr. I don't remember which one we did. Obviously MU, but I don't remember what the play was. But I'm sure it was mostly just key level stuff. Glad to have you on the stream. Well, another Wednesday, another flop overall. Either lack of trades or trades that don't play out. Always a good time. Good time. It's like National Public Radio, that Saturday Night Live skit. Yeah, good times. Good times. I'd like to give you some really cool insight other than we're going up, but I don't have any. We're going up till we're not, which is really, really, that's pretty good insight right there. We're going up till we're not. My barber's door says he's here unless he's not. Thanks. Appreciate it. We're just in an uptrend, and there's nothing you can do but wait until a setup appears or something that you want to have appears. I mean, right now I have a long. I've had a long since Friday, and because we had a weekly buy, and that long is already cashed in 2 times for very good money, and is obviously cashing in again today for more. And we'll see how it proceeds forward, but in the big scheme of things, I'm collecting money. And the short term stuff, it's kind of boring. Oh yeah, we do have a 5-minute sniper from 2028. We'll see if it plays out. This one will be interesting. It's a tough entry. We'll see if it wins, but like I said, the algorithms are smarter than I am. We'll see if it has enough strength to push up here, but it uses what's called the ATR, average true range, and that looks back about 14 bars, and the last 14 bars are pretty bullish. So we'll see if it has enough to push that up into the zone we would look for profit there. It also uses a state change, so it could also trigger for that reason. We can talk about Michigan winning tourney. I actually had both UConn and Michigan bets to win, so nice run. There you go, Brad. They had a good team, good squad this year. I'm glad they won. As long as it wasn't UConn or Duke, I was fine. I just can't stand Danny Hurley. I think he's a punk. I never really liked Mike Krzyzewski. Both good coaches. There's nothing wrong with them as coaches, but God, they're punk. Well, Hurley's a punk and Krzyzewski's a weasel. Sitting there with his face all scrunched up going, yeah, we got to be good guys and we got to do good things. And then their kids do the dirtiest crap on the floor. But anyway, that's another story. Why did you not enter the sniper alert? I don't trade sniper while I am doing this. I just have too much going on. I'm trading the Pivot Point Pro. I am talking to you guys. I'm updating stuff in the background. So it's not that I wouldn't have taken it. I would have. And I also we don't coach that one because it's self-contained. It's a self-contained indicator. So Pivot Point Pro does not give you the entry. It does not give you the exit. It does not give you the take profit. It gives you the entry, I suppose, in the fact that it tells you to sell or buy. But this gives you literally the number of the entry, the number of the stop, the number of the take profit. All of that is contained in the Sniper software. So I don't have to coach you. You just have to follow the numbers and play along. So I don't coach those trades. And I found that trying to trade both Sniper and Pivot Point Pro on these live streams is hard because the market can move very fast, and futures are unforgiving in that way. If you don't have everything set up and the market gives you a snap bar, you can be lit up. I don't like that. I don't like to be lit up. So Wednesdays I just trade Pivot Point Pro and I don't trade Sniper. To answer that question. And welcome to the stream, Nicholas. Is it Nicolas or I'm trying to do it. That's a terrible accent. I don't even know what accent it would be, but the way you spell it makes me think it could be pronounced that way. Could just be Nicholas. Don't take any offense to that. I wasn't meant to be offensive anyway. It was just how you spell it. I was trying to pronounce it correctly. I just have Sniper up on here, by the way, so you guys can see it more for if you want to take the trade and also demonstration purposes. So you can just see how it plays out on screen. I am watching SPX 7000 pretty intently here. Maybe even 7002. I think that was the prior high, right? Yeah, 7,228. So they could poke just above it. 7,005. But I do think a rejection will come from that level. Again, is that rejection the SPX had a long 15 here from 68 to 64, so that's pretty good. Well, I say that it could have been over here somewhere because repainting that I talked about earlier in the stream is stupid. Let's go back to the ES though. I would say if you were long, now is the time to start trimming profits. You might have mentioned this, but when is the new update for Sniper coming out? I'm hoping this week. We've got a few things to go through on it just to make sure it's working right and we have everything in place. But if I do it this week, it'll be over the weekend because then that way everybody has time to get it and see it and have it set up. Why do you think it's time to start trimming? Because we're reaching an incredibly important level. 7,000 SPX is a huge options level that should fail, and they were just a few points from it. and it's also the prior all-time high, so they should reject it the first time into it. And taking profit near incredibly important levels is smart. You should never get to your final destination with your entire holding. If you do, you're going to find out that you're going to go broke. Unless your risk reward is absolutely impeccable. Because what happens is you get up here to the first resistance zone and you say, no, I want it to go up to here. And then you don't take any profit here, and then they do this and you get stopped out. Or they do this and you get scared, so you close down here, and then they do this. Or they do this and then this, and you're like, see what happened? And then they do this, and they never get to your target. You should never have your entire holding at your target. Sure, does it feel good to get your entire position to your final target? Sure, of course it does. But it doesn't feel good to get stopped out for your entire position when you had winners. As David Frost used to say before he unfortunately passed away, I like David, base hits get you in the Hall of Fame. Unless you're Pete Rose, then you gambled on baseball. And then the Hall of Fame is highly hypocritical. Who is buying here? There are breakout buyers. However, if you're going to buy a breakout, I'll give you a little tip. And you can take it or not, doesn't matter. If the breakout level is here, I am buying the breakout if and only if they do this. So this is the level. They broke above it. I want them to come back to it. And then if they bounce, now I have a clear stop under this level. I see that they've tested it and pushed back off of it. And now I would expect them to continue. I am definitely not buying it if they do this. That is a no-go. If they do this, then what I want to see is them take out this high, and then you can get out then. But even then, I really don't want to see that. I want a you know what? Let me rephrase that. If they get back above, if they get back above this level, you can try. But so if they do this and then get back above here, then you could try with this stop. That would be okay. But this is the preferred breakout buy setup, at least in my opinion. But be very careful if they break out and go back below the level and then poke their head back above it. Be very careful of traps there. I believe in stop losses, but watch out for the market maker's Jedi mind trick to stop loss hunt. Well, that's why you got to place your stop losses appropriately. That is a very, very real thing, stop loss hunting. And so that's how so the trap is, a lot of people will place, if they got long, off of this back test, a lot of people will place their stop right here. And what you'll see is them do this. So the reason for that is, one, it stops out all the they're setting up a trap for everybody. It's really the genius of the market makers and the institutions. So in order to create energy to the upside, you have to create selling. So how do you create selling? Well, you got to push the market down. So all of the institutions, they are long this market. Okay, let's just assume that. So the market is pushing up, but the institutions didn't buy up here. They never do. They're not dumb. That's why they're the institutions. So the institutions, this is the 1 minute chart. So let's go over here to the hourly. The institutions bought back at the low. That's how you get those kind of moves. You don't get 3% moves if the money isn't buying the move. So the institutions bought all the way down here. Somewhere down here. This gap up, that's the start of institution buying. And you can tell because it never looked back. This is all buying. It also will tell you they're coming back here. So once you buy like this and you get 4 or 5 days and 8% straight up, now you got everybody, just like Sean said, and I hope he's asking that, like, who in the hell is buying up here? You run out of buyers, right? Because everybody's like, oh, we're way up here in the nosebleeds. Only people who are chasing the market now and who are the general public who have been brainwashed into believing that buying breakouts at all-time highs is a great idea. Without a setup, I mean, if you have a setup, of course, it's a good idea. Breakouts of all-time highs can work out very well, but you got to get a setup first. So people buy just saying, oh, we broke the all-time high, and then what they do is they need energy, right? They'll let low volume push through, and then the institutions will do this. And they will push until all the people that bought up here flip into sellers, so they get crushed on their position. They flip into sellers once it gets to wherever the stops are. So let's just say the stops are here for easy math and stuff. So all the buyers, they bought up here late and they put their stops here. So now they get stopped out. That's selling. And then they flip to selling to try to push it down. Well, then the institutions say, perfect. You guys are flipping. So I have two groups of sellers here that are the same people. The same people had to sell their longs, so that's selling, and they also wanted to sell the market so they didn't miss out on the down move. Then the institution now has buyers or sellers that they can buy into, and that's how you get the energy to push the market higher. They start blasting these sells, picking them up as fast as they can because they sold up here. So they sold up here, bought down here, and they start picking up these as fast as they can, and now they can push the market up to the levels they want so that their original positions can really collect at the level they want. So the institutions, great point there, George, use traps to flip sentiment of the market. When they run out of energy in one direction, that's when you start to see the market flip very strongly. And it's one of two things. Either they've reached their final target and they are going to sell or buy very, very strongly. So down there at the bottom, they had reached their final target of selling, and everybody else thought the market was going to continue to collapse. They reverse it 6% in 3 days. And they buy up all those sellers who are trying to short everything, and they crush the market to the upside, or they want to take it higher or lower, so they have to create a fake sell or fake buy. And once they get through a stop loss, then they can reverse it. Now, here's the cool thing about that for them. It works no matter what they do, because if they want to sell here, right, let's say this is their target, and they want to sell their positions here strongly, the late buyers get crushed. And then once they break these stops, all of these buyers get flipped and they want to sell the market. So you're getting two more sells. So that pushes a ton of selling volume into the market that assists them. So now you got institutional money plus retail money piling on to do this so that they can get their shorts set up at the right level and take the market back down. So that's how the institutions brainwash you into believing certain things and doing certain things, and then take advantage of you and trap you and use your money to fuel the market. Did that make sense? I hope that made sense. There's a 5-minute gap they need to fill on the SPY right here. Never set all position with stop loss. I don't know if I agree with that. I think it depends a lot on where you're at in your position. If you're just starting out, maybe you want to buy a quarter of a position and then you see if your idea is right and then add later, or you have two levels that you think the market will go to. So let's say you're unsure of this level and you're unsure or this level and the market's up here and you want to buy those levels. So you could get a bounce here and buy like a small quarter of position and say they do this, so you don't have a stop loss under here, and you say, okay, maybe they're going to come down, and you buy the second part of your position down here to cost average down. Then I would have a full stop loss for my whole thing under this. But it kind of depends. It's a case by case basis, but I think there are plenty of times it's justified to have a stop for your whole position. Would you use institutions and money makers interchangeably here on your analysis? No, not exactly. West Texas Chimney. Okay, got it. West Texas Chimney. Sorry, there's a lot of letters to break down there. Welcome to the stream. Not necessarily. Market makers. So market makers provide liquidity to the market. So they are, when you buy an options contract, somebody has to sell that to you. Now, there are some people who sell contracts as a way of making money in the market, but for the most part, the market makers are the ones taking on all of that risk by selling you the calls. On the flip side of that, though, they're also selling puts. So they're like a bookie. They're more like a bookie. They're setting a line. And they're saying, hey, we think the market 7,000 is going to be the line that they need to stay under, where people will give us a fair amount of calls and puts around whatever. Now, people can buy whatever levels they want, but when they start to see the most traded zones, that's when they say, hey, we just sold 1 million contracts at 7,000. We need to protect that level because once it starts going over 7,000, we are on the hook to pay that off. And we may not have enough puts on the books to cover, the other side of that. So they have to start buying long futures. So market makers are more of a bookie. They want to keep the market kind of even and between certain levels. So if we look at the Mentor Q levels, there is a gap between, so you have intraday and end of day, and all that means is at the end of yesterday there was a call resistance level that was important, and then in the morning they update that call resistance level. So you have two different ones. So we'll just do end of day so it's not confusing. So there's your end of day call wall. Now they're above that. That means they are underwater on this line. Very often they will want to push back below this line if they can. All of these puts somewhere down here are dead. They are dead in the water. So what they want is the market to close somewhere in here. Whether, really between the 1-day min and the call resistance, but somewhere between the call resistance and the put support, because this is where the people are buying and down there is where the people are selling, and this is kind of a dead zone where there's not a lot of risk. But once they get above this level, this is the highest level of option, these two levels here, this is the 0 DTE and this is longer term. Once they get above this, they are starting to get underwater, so they have to buy the futures, which fuels the squeezes. So they're more of a bookie. The institutions are more of a hold the position and set the price kind of outlet where they use the market makers against the public. So they see that market makers want to defend this position, for instance. And once they start pushing down, institutions will pile on to help the market makers defend that position because it liquidates all these people, and that fuels the fire for them to push the market down. So they can work in conjunction with each other, but they are not the same person. How many computer screens do you watch or have? I have 2 giant ones plus my laptop. So 3 screens. My laptop I think is 16, and then my big ones are 28. I usually have Discord on my laptop because it's the smallest, and then my computer screens have my trading stuff up and trading view and all that stuff. All right, getting very close to this 7,000 level on the SPX. About 7 more points or so. To be honest, though, Otis, I could have another one. I could use 4. And welcome to the stream. So some big things. We were talking about price action, and I said there were some interesting things on the chart since we're not going to get a trade anytime soon here, except for the sniper one. So if we go to the ES and we go to the hourly, some things that don't normally happen that did. They don't normally walk through. This was the most traded zone right here. They walked right through it. They did reject this high slightly. And then this is a nice 4-5 kind of setup here. They kind of walked through this one. They really didn't give a strong pullback off of 6,800. They pulled back a little bit here, but not, 30 points or so, not what you would expect. So generally when that happens, one, it's very bullish. But two, it means that eventually these levels will be respected and they will return to these levels. So does that mean today or tomorrow? No, but it means that this move up is likely to get retraced. Probably the bulls will want to hold this level, so probably back to 67.71 would be the first major place to watch, and then they'll really want to hold 66.50, 6600, this zone right here. They really want to hold that. If they lose that, it's probably going to be game over for the bulls for a while. And that doesn't mean the market's going to sink immediately. We'll still get the bounce and then the sink, but or could still get the bounce and sink. But those levels have not been respected. And these were very high volume levels. So very often that means that it's part of a bigger picture trap. So I think caution is warranted overall in the market. Doesn't mean you have to be flat, but it does mean you should be paying attention to breakdowns. You can see clearly here on the 1 hour chart, they have set a major shelf at basically, what is that, 7,000? So 7,000 is going to be the first level they got to break to get anywhere on the ES, and then this shelf right here at about 69.30 would be the next one. If they break 69.30, they're likely to come down into 68.50, which I think would lead them back down into here. Cash never got to see this price, and cash always gets to see whatever price that the futures got to see at some point. Slow burn here. Slow burn. Very overlapping pattern to the upside. Any chance we can get a sell with Pivot Point Pro if there's a clear rejection of the 7,000 SPX? Unlikely on the 5-minute. In fact, no is the answer because the choppy move up created a sell that didn't follow through, and so on trend days it will filter. So no is the answer to that. Should not be getting a sell. The more screens you watch, the more money you make. If that was the case, I could have some screens. I have 2 TVs in my basement right now, 2 giant TVs because we had March Madness up. I haven't put the one TV away yet. And I kind of like having 2 TVs because I can put something on one for the kids and then watch sports on the other one. But now there's no sports to watch, so it's sad. Baseball's a terrible game. Terrible game. So boring. Jack Mounts, glad to see you here. No, glad to see you here, Jack. Welcome to the stream. Also, everyone wanted to shorten, so the market naturally kept squeezing. Yeah, that is also something that happens as well. That's a good place to create traps. Everybody wants to short those most traded zones, and a lot of times when that's the case, they aren't going to give you the obvious play. They'll take it higher and then bring it back down, which we were long for, so we're happy. That's why I like your indicator. Don't need to watch too much. Yeah, you just need one screen for that, right? It makes it nice and simple. Do you feel like Europe market closing has an impact on price action? Yeah, it does. Always. I wouldn't say it's like a monumental impact, but you can certainly see the market for a few bars turn up or down sharply against what it's normally doing, or extend if it's a bullet. You know, if the SPI X is bullish and the Europe market's closing bullish, you can see that squeeze kind of happen in conjunction, because a lot of what they buy over there is American stuff. Even though I get their separate markets, but it still fuels buying across the board or selling. Long time follower. That's awesome, Jack. I'm glad to have you. Appreciate it. Glad to have all you guys. I wish we had more action, more excitement. If you took the sniper trade, you're still kind of fighting for it. It's not the most open and shut trade. Normally, it's an interesting one because it's a little bit of a late entry, but typically the squeeze trades go either in your direction quickly and you make the money, or they fail. They're usually not a long trade unless they're doing well, like you're just going in the right direction and collecting money. They usually aren't a choppy trade in the sense of you either get stopped out pretty quickly or you make your money and continue pretty quickly. So this one's grinding pretty hard, but that's because we're up at a major resistance zone and the bulls are trying to grind through it. We're at your trend line down on NQ. Yeah, I pointed that out a little earlier. Penny asked about that. It's a major zone. That trend line coincides with 7,000 SPX, which is a major call wall. I mean, it's just a major zone. So if they do just plow through it, then expect 7,100 to 7,300 directly. But that's the least likely scenario. It is a scenario, though, right? It's like rolling a 2 or a 12 on dice, 2 dice. It's the least likely scenario of the things you can roll, but you do it. You know, you can roll a 12. It may take you a while, but you can do it. All right, I'm going to give them about 10 minutes into the 11 o'clock hour, at least 11 my time, so about 12 minutes from now, to see if they can reject this 7,000 zone or just do something. We've just kind of watched them go sideways for the last hour, and that's incredibly boring. The fact that the most traded zone of the day is up here at the top isn't totally shocking given how many bars we've been up here at this level, but it's also an indication that it's a decision point, obviously. I mean, clearly, if you're looking at the chart, it's a decision point, but the fact that it's the most traded level tells you it's a big decision point. whether they're going to go ahead and break out, they have the buying. So if they're going to reject, they have the selling power here at this line. And if they're going to break out, they have the buying power. This is the most traded zone. And whoever wins this zone decisively, nobody's won it decisively yet. You can see they got above it, got below it, got above it, got to it, got above it, got back to it. Whoever wins this zone decisively will likely win the rest of the day. So if we see the 8 fail here, that's kind of the first barometer I would use for the bears. And then we will likely see the 21 and possibly beyond. And if we see the high here get taken out at 697, then that would be the barometer I'd use for the bulls. How do you explain options premiums so low, the one-day DTE trading at around $2, while it only takes about a 0.3% move to cover that? They're trading at a, do you mean why are their prices so low? Let me go look at options prices real quick. I don't have that screen up. I have the one day DTEs at $2. I see what you're saying. Tomorrow's options are, let me look at this. $1.80. So I mean, you got about a whole day. So I don't think they're trading. You're saying low. Okay. Yeah. Okay. Sorry. I understand your question now. Low volatility. Options prices are based on volatility, not solely on volatility, but a lot. When volatility is high, options premiums are very elevated. And when options prices are lower, they are, or when volatility is lower, options prices are lower. So we've had no volatility over the last few days. Remember, volatility doesn't mean big moves in the market. Volatility means that the market is moving in both directions very, very violently, or to the downside very, very. There's a lot of risk. There's more risk in the market. When the market's moving up in a either big, strong move or grind, that's not considered risk at all. So if there's no bearish potential being seen in the market, the volatility is very low, and we're in positive gamma, which magnifies the fact that volatility is low. So that creates low options prices, because generally, remember, the market moves up like this and down like this generally. What it basically says is the market makers are not feeling a lot of pressure to the downside yet. But I've seen many a day, where the midday move was going smoothly to the upside. We were up 50 points. Options prices were like 88 cents or something, like they are now. And by the end of the day, the market was negative 100. Options prices were like at $3, and the market got wiped out. So just because options prices are low just means that volatility is low right now, but a whale can come in immediately change that. They lull you to sleep. And from a premium standpoint, well, no, they're about right. Yeah, from a premium, yeah, they're just not seeing any volatility, which you can see on the screen. There's no volatility. Bears tried to break the 8, failed so far. ADDs at positive 34, certainly not a Banger bull day. When you see a trend day that has true power, you want to see the ADD around 12 to 1200 plus, and really, if you really want a strong bull day, 1500 plus. But 1200 is a pretty good barometer for the ADD. And then same thing for bears. You want to see negative 1200. So it tells you that um, a few stocks are pushing the market, and I'm guessing those few stocks are Meta, Microsoft, and Nvidia. All right, guys, last bar. They're building. They got to be building a squeeze, right? I haven't even looked. Nope, they're not building a squeeze. It seems like they should be. Um, Last bar here for me. We're not going to get a trade signal on this bar. I know that, but just give them a chance to kind of see if they're going to spike it and reverse it or give us anything to talk about. Otherwise, this is pretty boring and lame, and we'll have another wacky Wednesday finish. So, would you recommend buying a long-term call with a put spread as a protection during low volatility? Uh, I mean, there are a million option strategies out there, and all of them to me are extremely dependent on the market, the setup, the timing, the seasonality, the stock. There's just way too much that goes into making a blanket statement on how to trade options. That is a probably I'd have to look at it, probably a viable strategy, but that is a way too broad statement. I justify my risk with stops. I don't tend to protect with other things. There are lots of people who sell calls and puts. There are lots of people who run spreads for protection. There are lots of people who run iron condors for days like today. PT runs incredible trades, guys. If you don't know anything about PT, he's a professional trader. He's been one for a long time, worked on Wall Street, worked for some of the big names in trading. And um, I believe last I checked, somebody can correct me, but he said he was up over his trading room was up over 1,000 ES points this year already. That's one with three zeros. That is if you're trading one natural ES contract, $50,000 for the first quarter of the year. That's insane. Just insane. The guy is a absolute hidden treasure. Um, he is he is a phenomenal trader. If you're not working with PT, you're missing out. I can tell you that for $100 a month, you are getting about 1/150th of what he charges clients. All right, Bears are trying here. We'll see. They're going to try to break the 8 here. They broke the low of that last bar. They're below the 8. We'll see how it closes, though. See if they can hold down the close. Remember, they did break down over here, so this was a breakout failure that broke down. They've grinded higher in a really choppy format, and I did say that very often when these failed breakouts occur, like this, they're going to come down to the pre-market lows. So I would not be shocked at all today to see them at 693.05 later on today. That doesn't mean they can't go tag 7,000 SPX first. I'm just saying that I would not be shocked at all to see them down there toward the end of the day. All right, guys, they did not get it below the 8 on that close. We'll see if they bounce it back up here, but you guys will have to see that on your own. I am going to call it a day since there's nothing really going on, and this has turned into a terrible, choppy mess. Do not overtrade this. Wait for a clear signal before you try to make any kind of move, and be very cautious with your upside stuff. As I said, this area is probably a good place to trim. As you're looking at one of two outcomes, in my opinion, just blow through, in which case, if you have some runners, you can collect on those, or an absolute rejection, which could take us down to 693.05. And depending on where you got in, that could hurt you, or, it's going to hurt you either way. A 3-point drop or a 30-point drop is not a good thing for you if you're long, but just as a general overall concern. I appreciate everybody being here. We'll do it again next Wednesday. Check out the closing call at 3:55 p.m. Eastern Time every day, Monday through Thursday. We don't do them on Fridays because it's the weekend and I got stuff to do. Have a wonderful day, everybody, and we'll talk later today or next week.